Hello everyone, welcome to the Trendline Invest channel. So in today's video, as always, we're going to first discuss some stocks from the past that I covered and their performance, and then we will discuss the power trend indicator that I promised on Twitter that I will share with all of you. And I'm going to explain how to use the power trend indicator, what it does, and also the trading indicator that I have prepared for you. Okay, let's get started first with the stock performance. Now, the last week, I discussed the stocks from the 12th week of March, and this week I'm discussing the 19th March 2023 stocks that I recommended. So here I have 5 stocks, BPCL that I recommended, which is up just 3%, Kotak Bank, which is up just 9%, Kalpataru, which is down 6%, and Medplus stop loss was hit and it reversed strongly, and the GMR Infra is up 2%. Now, the reason I'm discussing these past stock performance is to give you a clear idea that markets, you cannot be right in markets always. So example, the last week video that I saw, I showed you 3 stocks where hit almost 50% and 1 stock hit stop loss, but here the stocks did not really perform well. Now, one of the main reasons why the stocks did not perform well is because these companies are large cap companies. Now, I keep always saying this and I'll insist this again. If you really want to make good returns in markets, you have to focus on stocks in the small cap and mid cap space. If you're going to focus on large cap stocks, which are F&O stocks in this case, like for example, these two are F&O, also GMR Infra. Now, these stocks tend to go sideways for a long time before giving a 10-20% move in just a couple of weeks, right? Now, this long consolidation might go on for months. Like in this case, last 3 months, these stocks have been consolidating in spite of the market doing well. And you need to understand this, that if you want to make returns, focus on small cap and mid cap. Now, I do give because they're also F&O traders, so that's why I suggested some of the F&O stocks as well. But let's take a look at these stocks and see how they did or how you could have handled them. Okay, so let's start with BPCL first. So BPCL is something I covered 19th of March, so it was somewhere around here when I was seeing a large base breakout, right? So what happened in BPCL on this day, that is on Friday 17th, is we were having a large base breakout. Now, the stock was in a very long consolidation, and then we were seeing a breakout from here, right? So after this breakout, so Monday the stock did move very well, and then the stock kind of retraced all the way. Now, our stop loss was somewhere around here. Now, it's very important to understand that in a stock, you have to keep stop losses around the swing low. Now, one of the ways that you could have traded the stock is after the stock had a move down, remember the stock is still in an uptrend. The stock is still in an uptrend, right? And when the stock kind of broke out from here on this pivot point, you could have bought more of the stock, especially for an F&O trader. You could have waited for this dip. Now also see the gap fill here, fill the gap, these 2 gaps, it filled it here, and then we had a breakout from a pivot point over here. Now you could also have added this point here with the stop loss at this point, and then you could have probably had this entire move here, and you could have been holding on to the stock even now. But let's say you were not that aggressive, you are just a positional trader, then what you could have also done is, added here on the dips, or you could also add it when it crosses this high, right? So we had this move here and we had a cross, right? Now remember, this is a just retest of this major support zone that we're looking here. So it is purely a retest, and I think this stock has still potential to head higher in terms of price movement, right? So that's the first stock. You could also have added the stock multiple times over here as well with the stop loss at this point, right? The moment the stop loss hits here, you need to get out because that breaks the uptrend structure. Now, since here, this is still an uptrend, and if it breaks this, the uptrend is broken, right? Now, you could do it in n number of ways, but that's how I trade and that's what I'm teaching you. So that's the first stock, BPCL. The second stock was Kotak Bank, which also was a reversal candidate in this case. Now, in this case, the stock did well because the stock kind of was reversing, from here. I remember covering it this week, 13th of March, the end of that week. So we had a long doji at this point, and then the stock kind of reversed from there. So it was exactly on this Friday I observed. I did the video on Monday, and here if you see the stock had a one-way move up. Right now, here also you could have taken a clear F&O bet. You could have bought more about this point when you had a pivot 3 to 5 days consolidation. We had a breakout over here, right? So you could have bought more with the stop loss at this point, and we had a nice move, and then you could have exited the stock around this point over here, right? If you're a swing trader. Now that's how you could have traded. Now, if you're an investor, you could still hold on to the stock because on the weekly charts, the stock is still in an uptrend, and there's every chance the stock will eventually head higher. But for a swing trader, you should have definitely exited here at this point, or even if you're a positional trader, because we had a dip, we went up, and then we broke that point. Now, that's how much you would get if you were if you are a positional trader or a swing trader. You would have probably got 11% reward here for a stop loss of a very tiny stop loss, right? So probably twice the risk that you took. So that's the second stock that I discussed. Okay, the third stock that we discussed was Kalpataru from the power space, or the infrastructure space. So here again, I think I was expecting a 16-year breakout, and that's why the thumbnail was 16 years, because we had a nice move here and we were kind of contracting, and we had a breakout from the zone, and we were almost at this point here, right? So here at this point. Now what happened is this did not really work out, but the stop loss has not hit yet. So if you had taken a small position, you continue to hold a small position until we have a breakout, right? Now let me tell you how to trade that. This kind of false breakout moves, right? So here, in fact, if you had covered this point, I think somewhere, 19th of March, so I covered it on Friday. Monday we had a gap, not a gap up, gap up, and then we had all the way closing down, right? So in case you were about to buy the stock, the first thing you could have done is just waited for this price to cross around this point over here. Now, let me remove this here. You could have just waited for a simple price break from this pivot point over here, and then you could have entered. That's the first way. The second point is you could have bought it here on the day open. Let's say you were just having FOMO, you bought it here, and the stop loss was somewhere here, right? So stop loss was around the swing low, as always. Now, then the stock came all the way down. Now, after you take a first position, you will not add on to that position until the stock again makes a higher high, right? Now, stock has been forming a low point. It has gone down, gone down, gone down. It's consolidating in a very, very tight zone. So this is basically a rectangle consolidation over here that we are seeing. And now if the stock closes above this point over here, that's a good point to add with a stop loss at the swing low again. Right now, that's how you should be buying stocks. Now, in case you bought it, and if you're a swing trader, you could have also exited this stock. In case you were frustrated, you could have just kept stop loss somewhere around here, exited here, or you just exit because the stock is going down, right? Now, always I recommend, if you're buying for the first time, not buy a big position. Buy a small 2.5%, 5% position and then increase it. If you're a swing trader, buy a 10% position and then increase it if you want to, right? There are multiple ways to do it. You have to find your method. Now, the next stock that we discussed was Medplus. Medplus, the stop loss was hit, and then we kind of reversed and went again. Now, the reason why I covered Medplus was we covered it here on 13th of March. I saw a massive bullish candle, but then it came, took a stop loss, and then went higher. Right now, there are multiple ways again to buy this. Now, in case your stop loss is hit, exit. You can't do anything. So here we covered it, and the stop loss is hit. We can't exit, and we can't do anything. Now, sometimes people use closing based stop loss. Now, I don't use closing based stop loss personally because I don't believe in that, because there could be a 20% move, and I usually have position sizes more than 10%, so I don't want to take a big hit. But if you have a small position size, you can wait for a swing low closing below 630. Now, stop loss I set was this swing low. Now, unless the price doesn't close below that swing low, you can continue to hold and then add more when the stock kind of breaks out from this pivot point over here, right? And then we kind of head higher. Now, remember, I'm referring to pivot points here. These are very tiny pivot points, which I have been in markets for quite some time, so I do take these pivot points. If you're a beginner, you will not be able to make this, understand these pivot points so quickly, so you need to have some practice. The pivot point indicator will not show you these pivots. Okay, let me make that clear. So, and then the stock went all the way up. Now, in case you missed it here, you could also add this stock here on this day when it had a closing again above that high point over there. So these are the ways you could have added the stocks. So the next stock that I covered was GMR Infra from the Infra space. Again, this was a stock that I covered, I think somewhere around here, March 17th, 18th. Now remember, again, the stock was quite extended. So the best entry point was around this point over here. But then the stock went up all the way and it came down and then kind of reversed. But remember, the structure, the higher low structure is still intact, right? Now it came down, but did not break the previous swing low. So our stop loss did not hit. And then it went all the way up and then it came down. Now, if you're a swing trader, one of the ways you could have bought is, this did not really give an opportunity to buy. But if you bought it here, then you could have added here above this point more. Or you could have also added here when you saw this reversal candle over here with a stop loss there, right? You could add it, sorry, just a minute. So if you could add it here on this day with a stop loss around this low. So if you had considered that this was a strong reversal from this zone over here, right? And finally, you could have exited the stock. Here, if you're a swing low, if you're a push swing trader, then you could have exited the stock on this day when we had a closing after this tight pivot. We had a closing over here. If you're a position trader, you could continue to hold on to the stock, but it's quite frustrating to not give any returns. But you can add the stock more because we are breaking out from a small pivot point over here. Right, then you can trail your stop loss to this point or even this point, up to you how you want to do it. So that's these are the 5 stocks that I covered last time, and I hope you did learn some lessons over here. Do comment if you have any questions in the comment section, and I will be happy to answer. So that's the first part of this video. Now the second part of the video is about the power trend indicator. Now let's get started and understand how to use this power trend indicator, when to use it, and which indicator to use. So let's move on to the power trend indicator here. Now here, if you see, the The power trend indicator is nothing but a trend indicator. As the indicator says, it's a clear trend indicator. Now, this was developed by the Investors Business Daily. It's a US-based company. It was developed based on research of a lot of trend stocks in Nasdaq, and it was basically trying to imitate William O'Neill's kind of price action theory and how he rides trends, right? Now, there are a clear set of rules which we will discuss here for entries and exits. To start off, the power trend starts when the following conditions are met. The first rule is that the low point of the price should be above the 21-day moving average, 21-day exponential moving average for at least 10 days. Now here you need to use exponential moving average because that's what the power trend indicator uses. So the low point of the price should be above the 21-day moving average for at least 10 days. That's the first rule. The second rule is the 21-day exponential moving average should be above the 50-day simple moving average for at least 5 days. Now remember, this is simple, this is exponential. That's how the rules are. So 21-day moving average should be above 50-day moving average for at least 5 days. The third rule is the 50-day exponential moving average, the 50-day simple moving average, not E, it says. The 50-day simple moving average should be in an uptrend, which means it should have probably been going down, but it should be above the previous day 50-day moving average at least for 1 day. That's the third rule. And the last rule is the price should close up for the day. For example, if the price has opened at 500, it should close above 500 for the day. Now, if the price opens at 500 and if it closes at 500 below, then that does not satisfy the rule. Okay, so these are the 4 rules for entries. We'll come to the indicator shortly, but what are the exit rules? The exit rules are this: if the 21-day exponential moving average crosses below the 50-day moving average. So if this is the 21-day moving average, and if this is 50-day moving average, and if the 21-day moving average crosses below, then that's a clear exit. Or this is or. Here all the conditions are and. Here it's and here it is or. Or the price breaks the 50-day simple moving average. The price should close below the 50-day moving average and is down more than 10% from the recent pivot high. So this is a tricky rule, but you will get it probably once you look at the indicator. So remember, the price should break below the 50-day moving average, simple moving average, and should be 10% down at least from the recent highs. So these are the rules that you will have to use for the power trend indicator. Now the indicator code is available here. I'll show you shortly how to copy paste it. But before that, I want to tell you a few things around the indicator itself. Now this is not a holy grail indicator. It does not work all the time. Let me be very clear here. If you think this is going to change your way of trading, I don't think it will change your way of trading until you have a very strong risk management technique. So there will be losses, there will be profits. You need to cut your losses and let your winners run. Now that's going to be the holy grail for any indicator, any strategy you use. You have to cut your losers and you have to let your winners run. Right? That's the holy grail for any strategy. And there's no indicator in the world which will give you a 100% win rate. Let's be clear on that. And you need to test this for yourself. I'll show you how to use the indicator, and you have to test this for yourself on multiple charts and see when you have to buy and when you have to sell. But let me give you some guidelines. Now you can apply this indicator when there is a large base breakout, and probably you will have a higher probability of making some money if you use this indicator after a large base breakout. Now what is a large base breakout? A large base breakout is the stock should come out of a long downtrend at least after 6 months of consolidation or of a downtrend. Now the longer the time period, the better. So if there are 2 stocks and one stock is breaking out of a 6 months downtrend, and if there's another stock which is breaking out of a 2-year downtrend, obviously you have to go for the stock which is breaking out of a 2-year downtrend. But if the other stock has better fundamentals, you'll go for that. Now there are multiple ways to do this. I will not get into details, but this is just one way. The second way to apply this indicator is look for the first higher high after a downtrend on the daily or the weekly charts. I will show you this in the charts shortly. That's another indicator. And then you can use the indicator as a guide to know when the trend is powerful and when the trend is weak. Okay, that's simple. Now this strategy is applied purely on the daily charts, right? So this is not built for weekly charts, but you can tweak it if you want. If you're really good, you can tweak it as well. And then the signals sometimes come late because the rule says that 21-day price should be about 21-day moving average for 10 days. So you will have some cases here and there when the price already existed. You can check ITC examples after you apply the indicator. It will clearly show you sometimes the stock is just moving one way up and it gives a buy signal. Now the risk there is too big for me, so I would not enter if the stock is already up 20%, right? So let it consolidate and then you buy. I'll show you some techniques. And avoid if the stock is already quite extended, as I said. and that's how you should apply these stocks. Now I'll take a few examples and I will show you how we can look at this. So I'm going to take example of Swaraj, Credit Access, Sharda Cropchems, ITC and Seed. Okay, before that, let's check how to apply the indicator. The indicator is here in this link, so you can find the indicator link in the description. What you have to do is just copy this entire indicator from here. So I'm going to do Control A. You can do not a Control A. You just copy here, right? I already have the indicator, but I'm just showing you how to do it. So you go completely copy this entire thing. Control C. You open TradingView, and I'm going to close this. And then you go to Pine Editor. Now please watch this very carefully. And then here say Open New Indicator. Right? And you say yes. Right, now you will have an empty screen like this. Right, open new indicator and you'll have empty screen like this. Now delete this, and paste the code that you copied. Right, now go back here, copy, and come here. Yeah, now it's pasted, and now you will see that this indicator is pasted. And then click on save, give it a name. Let's say this is demo. Save it. And then here you will see that the indicator is compiling, right? Now here it should clearly say that the indicator has saved. Now in case it is not saved, you'll see some errors. You're probably just doing something wrong. Just try to copy paste, do it multiple times and you'll get it right. And then you add this to the chart, right? And that's the indicator for you. The indicator has been plotted with power trend on and off. Now let me explain this indicator in detail. Now this here, if it is red, it shows that the trend is not strong. There's no power trend. If the trend is green, for example, if you go to credit access, you will see that the trend is green. The spotlight here is green. And so you can remove all, I've just removed the drawings to make it clear. And you will see there are two lines plotted here. So the green line is 21-day exponential moving average. And the red line is the 50-day simple moving average. Now these are the two lines that are used in this indicator. There's nothing else. And then the rules are automatically calculated. Also, you can go to the indicator and see the code for yourself. All the conditions are there. You can just read it. If you are good at reading code, you can see it. Okay. Now let me explain how this indicator works. Now, first thing I said is you have to look for large base breakouts. Now, in this case, there were multiple signals. For example, first time there was a signal here, right? So let's just zoom in. Yeah, there were multiple signals here, here, here. Now remember, after a strong move down, the stock is always going to reverse. So a large base breakout means the stock needs to at least have multiple touch points and then the stock kind of breaks out. Now here, if you see, I'm just drawing this trend line over here just to show you what is a large base, right? So I have kind of drawn this. So this is a major base, right? Now until the stock doesn't break out from the base, I would not buy at least. Now you can go ahead and buy the stock here, 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 but these are not going to be really big trends. A big trend develops when a stock breaks out from a very large base. By large base, again, let me explain. A large base is when a stock is breaking out from a very long consolidation. Now, for example, I've just hidden the indicator for now. Now here, if you see, this is a large base breakout on this month, Feb 2022, credit access broke out from a 2-year downtrend. All right. So because the price finally has broken from this long downtrend. So now if you apply the indicator after Feb 2022, Feb 7th of 2022, which is somewhere here, right? So we had a breakout around that week. And then if you see, we had the first signal over here, right? The first signal of trend on came over here. So what you should do is you wait for the price to break out from a short consolidation, a very short consolidation. The price has broken out from a long consolidation and we are consolidating around here. Now a breakout from here will mean that the trend is still up, right? So once the stock breaks out, once the stock gives a signal, wait for a short consolidation breakout or just buy above that high point over there, above the pivot point over there. I prefer buying it over here because, this is just a flag kind of a pattern here. We had a strong breakout and then the stock goes up, 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 and then the power trend goes off here. So you sell off the stock here, which means you have gained, let's say around from here to here, you would have gained around 27% returns, right? Your stop loss would have been somewhere around here. So 600 point stop loss, you would have gained returns around 744 to 200 points. So 1:2 risk reward or 1 to 2.5 risk reward. And then once you exit here, keep the stock in your watch list, right? And then if you see the stock kind of goes sideways, 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 and then we have a power trend on signal here. right? Now, as I said, you have to wait for the price to break above this pivot point or the price to break out from this downtrend. Now, in this case, the price broke out from the downtrend here. So you will not enter the stock here, right? You will enter the stock somewhere here. Now, you can also enter the stock here, but I'm telling you my technique, how I would approach this indicator, because every indicator has a false signal. And if you want to avoid that, you have to apply more rules, right? So you would enter the stock somewhere around here. And then because the power trend signal is on, this higher high is still on, and then the power trend signal comes here. Now you could also enter the stock here. After this breakout, you enter the next signal, is up to you, but that's how I would apply. So wait for a large base breakout and then buy the breakout from that power trend signal. Whenever there's a breakout from the consolidation, buy that power signal. You don't have to have the signal on, but you can buy the breakout over there, right? Keep a stop loss signal. That's how you can approach this. Now remember, before Feb 7 2022 I do not bought the stock. Okay, let's move on to the next one example, which is Swaraj Engines, right? Now I'm showing you both cases, how you should buy and how you should not buy. Now again, in Swaraj Engines, now we had let's first focus on the large base. Now what is large base here? The stock was in a clear up downtrend. So if you see, the stock was in a clear downtrend from here, and I'm connecting these points over here, right? The stock has been in a clear downtrend, and then we had a breakout over here. Now you could have kept the power signal on here as well, when this was a fake breakout, and if you even if you had bought, the stock might have hit stop loss, right? And then the stock went all the way up, and now from here on the trend is up. Now from here on, when we had a breakout over here, the trend is clearly up, right? So the trend is up. So we had a breakout again here. We had a false breakout here from the trend line, then it came down. Then now we crossed the previous 2 pivot points, and then now trend is clearly up. Now until the swing low is broken, the trend is clearly up on the weekly charts, because here we had a weekly chart down. This was a move up, we had a down, and then the stock is going up. Now you go to the daily charts, and now you see where the power trend indicator is coming on, right? So this was a breakout here. So the signal was on. You could have bought somewhere here as well. You could have bought somewhere here or here, anywhere. So this was a pivot point breakout. You could have bought it here with the stop loss here, and you could have made some money here. You could have exited here. But then the next indicator, trend on, came here, right? Now what you do, you can buy here itself, because the stock almost crossed here, right? You buy here, the stop loss around there. Then your stop loss would have hit. Now remember, this is not a holy grail. So stop loss got hit, and then you could also buy this breakout over here if you want, right around this point, right? Now if this sounds confusing, you can just follow trend on, trend off. Whenever trend on is coming on, you buy. When trend on is off, you sell. You again buy, sell. So you had 2 false signals over here, and then the third signal is now in an uptrend. That's also a simple way, right, to identify if a stock is in an uptrend. So these are 2 examples. I'll just take a few more examples of Seat. Now Seat had multiple signals, so you could have bought here, sold off here. You could have bought here, sold off here. Now this was working very good, right? So we had 1 profit. This was no profit, no loss. This was a small profit. This was a small profit, and then here you could have bought here as well, but this was a loss trade. This was a good trade, and this also is a good trade going on, right? There are multiple ways. You could just simply use power trend on and off, and probably you can make money as well. But I would recommend focusing on the first higher high. So for example, this was the first higher high, but the stop loss hit, then this was the next higher high. You could have bought here as well, or focus on large base breakouts. If you see ITC here, ITC had a very good couple of trades here. Now you could have bought the large base breakout here. So the large base breakout here happened somewhere around this, somewhere after 11th October. You could have bought all the signals, right? So after 11th October, so this was 11th October around here on this point. So the first signal was here. You could have bought this, and you could have exited here. The second signal was here, and you could continue to hold on to the trade now, right? That's one of the ways to do it. The last example was Shraddha Cropchem. Just show you again. So the large base breakout happened, somewhere here. This is when the large base breakout happened. So anytime after this, if you had signals, you could have bought that signal, right? So I'm just going to go back. So the trend was already on here. So you could have bought this breakout over here, and you would have sold off here. And the next signal came here, and you would have sold off here. And now the next signal is on. Now remember, there are multiple false signals and false entries as well. So I hope this was clear. Probably it might take you some time to understand this complete indicator. But again, remember, in short, apply the indicator only after there's a large base breakout, or apply the indicator on the very first higher high after a downtrend on daily or weekly charts. Right now, remember, after the first higher on daily or weekly charts, the indicator should still be applied on daily charts. Okay, even for large base breakout, After you look at the large base breakout on the weekly, then apply it on the daily charts after the large base breakout. Now that's simple rules, and then you just have to follow the signals of power trend and power trend off. Okay, so that's it for today. It was a long video, but I hope you enjoyed it, and I hope you can copy this and apply the indicator for yourself. And don't forget to subscribe to my channel and like this video as well. I'm going to leave you here. Take care, stay safe, and trade safe. Until I see you in the next video. Bye bye.